Okay, financial accounting and reporting in public sector. Okay, today the discussion will be broad discussion, general, just to provide you with the context, how what is the financial accounting and reporting in the public sector. Okay, if you look at this objective of financial accounting and reporting, users of financial information, basis of accounting. Okay, take note of that carefully, listen carefully. Okay, but at the same time, there is a conceptual framework of financial accounting and reporting provided by the international body, adopted by Malaysian government. Okay, for accrual environment. Actually, you are both, for cash environment as well as accrual environment. Okay, so we'll discuss that in general. Right. So with regards to this ayat of Quran, Surah Baqarah, or you believe when you deal with each other in transactions, involve future obligations in a fixed period of time, reduce them to writing, let us write down faithfully as between the parties. Okay. I think possibly this ayat or this verse has been repeated to you from time to time from different classes, but this is very significant. That's clearly been mentioned how transactions, obligations, all this need to put in writing, and definitely reporting to make sure that the obligations have been fulfilled in the best way. Okay, to make sure that the promises, all this can be honored. Okay, why financial reporting in public sector is important? To establish an appropriate accounting system for the purpose of accounting public resources. Okay, I think generally, people are citizens. Okay, the big part of this are very interested on how government utilize public monies. Okay, so there must be a standard or reporting standard to make sure that they can meet the accountability requirements. Right, so accounting provides the financial accounting system, the structure that can provide the best practice in the reporting of financial information. They execute the function of custodianship and stewardship over public resources. Okay, so because the civil servants, the elected civil servants and appointed civil servants, okay, they are basically been entrusted to use public monies in the best possible manner. Okay, I think this class we talk about value for money and others. So as part of, I think, stewardship as part of accountability. To discharge public accountability over all kinds of public resources. Okay, so you can see these are the main framework. So why it's so important to have a good accounting system. Okay, that's in one way. Another, of course, at the end, with this good reporting system, can provide the framework and provide the system that make civil thought process, okay, as well as expectation, have been translated into reporting requirements. Financial reporting objective in public sector, okay, based on the conceptual framework by IPSAS, IPSB, International Public Sector Accounting Standard Board. Okay, this is I think it is part of IFAC, and they are issuing IPSAS, as the International Accounting Standards. Of course, I mean, International Public Sector Accounting Standard is an offshoot of IFRS, okay, issued by the International Accounting Standard body. Okay, but it was been modified so that it can be applicable to public sector organizations. Nevertheless, I mean, in terms of reporting, they must have a conceptual framework to provide, how they develop all these standards and what need to be achieved. Of course, obviously, nowadays, if you look at the accountants, professional accountants, their main focus is to comply with the accounting standards. That's become their main way of, to exercise or to discharge their responsibilities. Okay, to provide information about the entity that is useful to users for accountability purposes and for decision-making purposes. So you can see that clearly. There are two use for accountability, for reporting, okay, and for decision-making, okay, for internal purposes, or maybe between inter-agencies, okay, ministries and the agencies, and between parliaments for government at the top government level. To discharge accountability obligations, okay, provision of information about resources entrusted for service deliveries, service delivery achievement during reporting period, and its capacity to continue to provide future services. I think that's what financial reporting is, isn't it? Okay, based on the past year spending, with the understanding of this also equally good for future capacity to provide the services. Okay, so generally the level of spending or expenditures is basically reflecting the capacity to deliver services. So delivery services here means public services, healthcare, education, okay, defense, security, transportation, and to manage, to develop the infrastructure of the countries, okay, and so forth. Right, this one is based by National Council on Governmental Accounting. This one I think based on US, demonstrating accountability and stewardship, decision-making in economic, political, and social purposes. Okay, so you can see that the scope of decision-making, beside accountability and stewardship, for decision-making covers economic, political, and social purposes. Okay, so it's more than economics. Okay, unlike the private sector organizations, okay, traditionally they are just main focus on profit, but only nowadays, okay, there are a lot of pressures of internet, the stakeholders. Okay, so they take into account sustainable development, okay, and sustainability, okay, as part of their investment and as well as operational decision making. In public sector is these are definitely part of their domain, okay, economic, political, and social purposes. Evaluating managerial and organizational performance, okay, this also can be, by right, financial reporting provide enough information for users to assess the organizational performance, just like you assess private sector organization with profitability, and okay, with the financial statements, you have enough information, relatively enough information to assess their profitability, liquidity, and other criteria of performance. Okay, accountability and decision making, assessing the compliance of government agencies with legal and other statutory requirements, okay, regarding how resources are obtained and spent, okay, with regards to public accountability. And definitely the role of Parliament is pretty much is at the heart of this process. Ensuring relevant authorities in government are making rational decisions about allocation, distribution, and utilization of resources for various sectors of the economy, right? Okay, so with financial information, if they can provide enough information, so they can lead to rational decision making. So rational here means cost and benefits. Okay, generally a project, a decision will be made if the benefits more than the cost. Okay, thirdly, assessing the capability and capacity of government organizations to provide high quality product and services, and its ability to continue to serve the public. Okay, that's also very important. Okay, for performance evaluation, serving as a useful tool to monitor performance of government organizations in terms of their efficiency and effectiveness. Okay, so this is equally important. I think we talk about internal performance measurements. Okay, but in financial reporting also is part of this to assess government organizations' performance. Okay, with regard to efficiency and effectiveness. Providing government an opportunity to put forward statement of its achievement to influential users and public. Okay, so I think in general, at the end, okay, so the government have to gain the trust of the people. Okay, that is very important to gain trust. Okay, and that will lead to other form of supports. Okay, and in terms of taxation, tax payments, in terms of votes, okay, and others. Okay, that's so how to share those achievements. Because definitely financial reporting can provide that dimension as well. And you can see from time to time that this information also being debated in the parliament, okay, because very high quality information, if you talk about financial reporting, because this information has been audited by national audit departments and its representatives. Right, these are comparison, okay, and some features of financial accounting and reporting of public sector in public sector. Okay, accounting concepts, reporting entity. Okay, so in what entity that should prepare financial statements. Okay, so you can see that here based on funds, separate funds. So each fund provide financial statements. So that's what is the current practice is with regards to financial statements. Okay, of course, I mean that also can be translated that to agencies. So in government agency also they have to prepare financial statements, right? But in just that in the context of Malaysian government, I think we'll discuss later. So which agency will provide their separate financial statements? Okay. So I think the practical side of it, you have to be very careful. You have to learn carefully or in detail a bit more. Okay, but in general, each fund, okay, will provide their prepare financial statements. Okay, reporting period, fiscal year. Okay, unlike private sector, they can choose their accounting period. Okay, other than the year end. But in the case of government agencies, must be fiscal year. Okay, I think the easy way to understand this is basically it's closely related to the budget period, because budget period is also fiscal year. Okay, so for financial reporting period, okay, follows based on fiscal year. So of course, at the end, this is also part of budgetary control and the financial performance. Okay, for the parliament to monitor the government agency spending. Okay, at the end, of course, they must also provide the financial reports. So must be equally, I mean, to reflect the same period, the budget that they provide. Okay, the financial performance that they're going to assess, so based on fiscal year. Right, now we move to basis of accounting. Okay, before I move on, is it a common term for you, basis of accounting? Anyone? When you look at this basis of accounting, what comes to your mind? Is it a common term nowadays among the students? Method. Yes, Sister Hidayah, what method you're referring to? Okay, one more time. Basis of accounting. What comes to your mind? Is there any triggers, any thought process? Accounting thought process? Oh, the basis, method used. Okay, interesting. One more answer.
maybe assumptions behind the methods used.
Oh, you mean method here is accounting method, huh? Okay. It's all right. The assumptions used. All right. Okay, one more. Basis of accounting. Well, never been taught nowadays, huh? Wow. Just taken as it is, huh? Okay, interesting. Yeah, true, because MFRS basically accrual accounting, isn't it? So you don't have to face, you don't question this, okay? But in public sector, yeah, now you need to be flexible in your mind. Measurement, yeah, measurement. All right. Of course, bases have implication on measurement. Because in accounting standards, we have recognition. Look at accounting standard, isn't it? Accounting standards are basically referring to, or the scope covers recognition, okay, measurement and disclosure.
So,
Yes.
I heard about basic of accounting when I'm doing the first assignment. When I'm reading article about new public management, they are mentioned about basis of accounting.
Okay, all right. How many of you? Okay, I'm not sure. I think it's also discussed in financial accounting framework, isn't it? MFRS. Okay. I have to call. Let me see MFRS. Okay. Anyway. Our general purpose reports. Today, economic resources, past cash flow, reflected accrual accounting. Okay. Yeah. Maybe the term is not clearly spelled out, right? Okay. Understood. Yes. Okay. Never mind. Maybe because the old standard they clearly mentioned. All right. Anyway, accounting standard covers this recognition, measurement, and disclosure. So basis of accounting have influence on all this. Recognition, measurement, and disclosures. Okay. I think we just discussed. Okay. So you can look at this. In the government, okay, they have cash basis of accounting. This is what current practice is. Traditionally, this is the most dominant basis of accounting, cash basis. Okay, and then nowadays the best practice now they move on to full accrual. So many countries in the world now is moving to full accrual. Okay, but in between there is a modified cash basis as well as modified accrual basis. Okay, right. If you look at these two, Malaysian government they use modified cash basis. Okay, for the current practice. But by this year, they will also provide full accrual information. But anyway, they provide, for the past many years, they use this modified cash basis. It's not pure cash basis. And also there's another option, they call it modified accrual basis. Okay, it's part of reporting, accounting and reporting in public sector organizations. Right. I think if you look at cash basis, you know that, isn't it? For accounting, if it is cash basis, it means that only cash related item or transactions will be in the financial statements or will be in the GL, in the general ledger, okay, or in the accounting records. Others, they're not going to enter into the system. Okay, unlike full accrual. So you need to recognize this. You may argue why, because since full accrual is the best accounting basis, so why in the world you allow organizations or government to practice cash basis? Okay, this one I think in terms of rationale is quite. I think there is a reason for that. Okay, we can discuss later. because you talk about control as well, control of budget, parliamentary control, because accrual provides more flexibilities, okay? And the simple argument for why full accrual sometimes it needs certain level of care, because there's also can be subjected to manipulation, right? So there's a cash basis, everyone can agree, because government level you can see how to please 300 members of parliament, okay, or scrutinized by the private by the members of public, as well as the budget itself. You remember budget is the every time when budget has been prepared, is basically cash basis, okay, it's basically cash basis. But you learn the best basis of accounting is accrual, or maybe what you know is accrual. Do you know accrual accounting, class? Or this is the first time we mentioned to you? Because you are very busy with MFRS. Have you heard about accrual accounting before? Oh, quiet. Okay, yes, all right. Right, okay, so I think
Yes,
that's, yeah, so basically MFRS are all accrual, accrual accounting. Okay, accounting, or MFRS or IFRS. Okay, so with that understanding, so you see, so we have to discuss this because in practice, okay, as we speak, Malaysian government as an example, and maybe definitely other countries, only developing countries, some even less developed countries, they use accrual, okay, for their reporting. Why? Generally, international donors, okay, like World Bank, okay, like IMF, they require the local the state the country's government to use full accrual, okay, in their reporting as part of, because of part of their funding requirements. Okay, if they don't provide, then of course, I mean, they can always stop the donations. So that's why you can see some developing countries, okay, they already use full accrual accounting for many years. Malaysia is still moving from cash to full accrual. Of course, this year will be by right. I think by right in 2017, if I'm not mistaken, and then they keep on delaying. But this year, inshallah, 2020. They will prepare based on the accrual accounting reports. I think just to share with you, one of the reasons triggering adoption of full accrual, okay, I still remember at that time, because cash basis is only will enter, of course, that time the system still manual as well, but nowadays it's all online. I think by then, in terms of control, is quite good. I think what happened was there was a counterfeit checks. Okay, fake checks been claimed against the government, right? And it cost government hundreds of millions. Okay, yeah, I would say big. I think millions of dollars. So at that point of time, because of the pressure by the public, so government clearly mentioned. I think that time was during the time of Pak Lah. Abdullah Badawi was the prime minister. So one of the ways to address that problems, because of timing issues, because in cash basis they're always being delayed in recording. They only record based on cash payment. Then there was a need to implement full accrual. Okay, so independent private, basically one of the big four auditing firms were given the job. Okay, what was mentioned in the media was there was 100 million being allocated for the migration from cash basis to full accrual. Okay, 100 million ringgit. Of course, I mean, but the job, I'm not sure they get the full job for the full package. But the first audit firm was selected was, if I'm not mistaken, PwC. Okay, maybe you can check. That one is in 2007 or something. Okay, you can check in the internet. It's the if the news is still there. For accounting in Malaysian government. Yeah, you can check. 2007, if I'm not mistaken. Okay. Yeah. All right. Anyway, you can check. Get the age. Okay. But there's a background of it. But anyway, even internationally, globally, okay, countries are basically adopting full accrual. Okay, so you look at this feature. Okay, another concepts. Asset and liabilities under cash basis. No disclosure or no recognition of assets and liabilities on the balance sheet or in the statement of financial position. Okay, on the cash basis. Equity on the cash basis. Okay, fund balance. And then financial statement, statement of receipt and expenditures. Okay, statement of financial performance. Okay, on the cash basis. Right. Users of financial accounting information. Okay, so you can see this: taxpayers, investors, donors, fee-paying service recipients, vendors, legislative bodies, management, oversight bodies. Okay. But oversight bodies, yeah, mainly at this point is Public Account Committee. Public Account Committee for the government. For the government. But if it is listed companies, okay, they're more advanced. Not more advanced, but there are other bodies. Okay, like audit oversight under ACE. Okay. Now we move on to fund accounting. Okay, one of the ways to account in public sector when yeah, I mean that's generally using fund accounting because they have multiple source of funds. That's way. The other is of course been as a part of practice, okay, accounting practice in the public sector. Another is the fact that fund has been prescribed in the regulations, in the statutes. Okay, so what would be the relevant fund accounting for these funds? Need to be developed. Okay, with all this development, right? We call it fund accounting. I think in the US, definitely widely used. Okay, fund accounting, and in the UK was also recognized. But in Malaysia, definitely there are practice of fund accounting, but the way of reporting can be, need further explorations and understanding. Right, fund accounting recognizes each class of funds as unique characteristics and objective. Okay, so listen carefully. Okay, and then you can see fund accounting. Okay, if we link that to entity. Fund accounting, okay, and an entity, a government entity can be a fund by itself, okay. That's one. The other is with the fund, because with the money, pool of money being entrusted, then how to manage the money in the best possible way, okay. So just, if you look at the private sector, you have fund managers, right? So either it is mutual fund, investment funds, and others, okay, you can use that similar understanding. That's one. The other is if you look at Tabung Haji, Tabung Haji? Pilgrimage Fund? Tabung Haji. Anyone know Tabung Haji?
Yes.
Yes. Okay.
Yes,
Tabung Haji is it's a fund. Okay. The word tabung there is fund. Tabung Haji. So pilgrimage fund. Okay. So you can see how a pool of money being developed into massive organizations. Okay, from the and because of the result, returns and investment well managed, okay, it's been providing good dividends for the members, okay, and of course in between there is some governance issues, but in a way it's very successful. But the issue is because the money being entrusted to Tabung Haji is the the money of the, not the government money, yeah? They are not the government money. They are money by the all these future pilgrims. Okay, so basically all the results of the management, the money cannot be, can they be pooled with other funds, or must be very specific for pilgrimage fund only? Anyone?
Pilgrimage only.
It's what? Can be mixed or just separately managed? All the funds from tabung haji. Any answer?
I feel like separately managed.
Yeah, exactly. Because the money is not government money. Yeah? The money is from all the pilgrimage. They provide 10,000, 100,000. Okay, because before because they accumulate all this money, gradually, okay, until they reach the limit. So out of that, they receive dividends, and mainly dividends. Huh? So definitely, from this money and from all these pilgrims, okay, from all this haji, okay, the money will be invested. That's the idea, isn't it? And with the invested, the fund grow to the what you can see now. Okay, they invested in major business, okay, including petroleum, okay, TH plantation, okay, with the plantation agriculture and others. Okay, become huge entity, right? And from there they can provide to support all these haji to go. So this is good example, the work of fund and then fund accounting. So to make sure that the money be accounted properly, so that it can achieve its objective. Okay, I think that's good example. But in government, there are various of funds and need to be the accounts for it need to be managed and kept separately. Yeah? So that's the idea, the original idea. But of course, then you can see the variation of practices. Okay, fund accounting recognizes each class of fund as unique characteristic objective, right? And then, so look at the bottom left. Each fund is an accounting entity. Separate financial statements are prepared for each fund. Okay, so you need to recognize that. Huh? Of course, within government organization, they can have multiple funds. Okay, but generally, what we understand, one entity is an accounting entity. Okay, for reporting, for financial reporting purposes. So in this case, even in government, in one government agency, there are multiple funds. Then each fund is an accounting entity itself, where they require the preparations of financial statements. Okay. Right. So financial statement here means okay, statement of financial performance, statement of financial position, and others. Cash flow. Each fund produces separate financial statements. Okay, and it can be two types: unrestricted fund. Okay, and these are general categories. At least you can recognize this. Okay, unrestricted fund, which can be spent for any charitable purposes of a charity, if it is a charity for purposes. Okay, if it is donation, then it depends on the term. Okay, of course, these are unrestricted, restricted, another form, of course, restricted fund based on their term of reference when the money has been entrusted. Okay, restricted fund, which can only be lawfully used for a specific charitable purposes. Okay, of course, here may not be charitable, but I just take this from the, I think from mistaken, the SOP, SOP. Right, because that's the only clear guidance that we have in our area. Statement of this one, I think, issued in the UK. Yeah. Right. So, but anyway, still, because of good practice, you can have this unrestricted fund. Then you can see the money from that fund can be used for more options. Okay, decided by the trustee. Okay, of the fund. Whereas if it is restricted, then only for the term of reference what is being decided for the fund. Okay, so I like tabung haji. I think as you mentioned, right, because it's only for the pilgrims. Then all the money should be for the best interest of the pilgrim, for the haji, whoever provide invest their money in tabung haji. So that's the way. There is no other parties can benefit from tabung haji. Okay, so that's the general understanding. Okay, of course there can be debate and arguments. This one is FRS 102. Okay, providing these the definitions of fund accounting: unrestricted and restricted. Unrestricted fund are spent at the discretion of the trustee. It can be used to supplement expenditures made from restricted fund and to be set aside to be used for future commitments. Okay, so it's not all only can be used in the period. They can be set aside for future commitments, particularly those who are non-discretionary items, like rental, okay, like salaries, okay, for the continuation of operation of the entities, they need to be provided even in the future. Restricted funds can only be lawfully used for specific purposes, restricted by specific law or trust deeds. Okay, so of course, government, then it can be statutes, okay, law. If you look at tabung haji, is basically based on the tabung haji, law or regulations that be established for tabung haji, as well as I think Pemodelan Nasional Berhad also. It's a big fund as well. Restricted fund can be categorized into two types: restricted income fund or endowment funds. Okay, so restricted income funds are to be spent or applied within reasonable period from their receipt for specific purpose of the funds. I think in the case of income funds, basically, okay, they can be fully utilized. The money in the fund, unlike the endowment fund. Okay, endowment fund where the principal need to be kept. Only the income can be spent for its specific purpose or for its beneficiaries. Okay, so I think if you bring this to Islamic asset, okay, like zakat, so zakat is a restricted income fund in a way. Okay, I'm not trying to compare, apple to apple, but the money need to be spent to be distributed to all beneficiaries. Okay, like endowment fund, like wakaf, isn't it? Wakaf, only the principal must be intact, whereas only the income can be distributed, okay, or can be used for its purpose. But in government, there can be others, okay? There can be, let's say, for instance, INCF. Have you heard about INCF? INCF, the Islamic Banking Institute that is under Bank Negara. You heard about INCF?
Yes.
Yes. So INCF is basically created based on the. Oh no. You can Google INCF. INCF. I think that's a good example. I mean, the one that I can remember. Yes, INCF. Yeah, exactly. Brother Yasin. So INCF basically was established because there was a 500 million fund. Fund was established. Okay. But I heard the money is gone already. I'm not sure why. It's just maybe talking so 500 million fund was established, and offshoot of that, to create ECF. So at that point of time, when the government provided this 500 million to improve human capital in Islamic finance, so definitely IIUM was quite happy that time, okay, with the belief that this money will be entrusted to IIUM. But then, that's why stakeholders pressure, whatever, what happened. But suddenly the money was channeled to central bank. Okay, so that's why ECF is under Bank Negara. Okay, yeah, ECF definitely based on, they operate based on endowment fund, that 500 million. Okay, but I'm not sure. You can check if there is still reporting for that. Okay, it's interesting to know. Okay, right. The reporting in maintaining the accounting records, entities must separately identify each restricted fund and the income received and expenditure made for each restricted fund. Transfer between funds, a separate caption in financial statement is used to show transfer between funds. Okay, this is what has been prescribed by SOP. statement of recommended practice, okay, under IFRS 102. This one is based on UK. Yeah? The total transfer recorded between classes of fund in the reporting period must also add cross figure. These are some of the standard requirements. Okay. But anyway, because this can be guidance if you want to use fund accounting, right, as a best practice. Right, fund accounting in public sector, features of public sector funds. The resources of government entity are not fungible and cannot be treated as one mass. Okay, that's the reason why fund accounting is very relevant in public sector organizations. Okay, specific restrictions are made on how money is paid to the government entity can be spent. And multiple funds may also exist in one public sector organizations. Okay, that's why this needs to be kept correctly, because they cannot, the fund, because they have specific use. Okay, they cannot be pooled and as if the top management of the agency can use indiscriminately. Yeah. Okay, I think if you look at the first point there, they are not fungible, or they cannot be used for other purposes except that it's been entrusted for. Okay, with that, application of fund accounting, public sector as a government entity does not have pool of resources that can be used indiscriminately. Fund accounting enables public sector organizations to prepare separate financial statements for different funds, maintained as each fund has its own specific purpose. Okay, later on we'll see, because the Malaysian government, they use fund accounting. Okay, so each fund, they will prepare the financial statements, okay, under Federal Consolidated Fund. And I think we discussed this. And examples including revenue, trust, and loan accounts. I think these are three accounts under the Federal Consolidated Fund. So each one of them, financial statements are being provided. But for the accrual accounting reporting, remain to be seen, the format. But this one is under cash accounting. Okay, reporting of funds at agency level. Okay, examples of fund accounting in terms of preparation. We'll discuss in the next class. But I just show you a quick look on example for IUM. Right, so this is based on the report of our university. 2009, I think, can be disclosed to you. But this one is based on annual report. Okay, so I think you look at the bottom there. Okay, of course, the assets and liabilities, they're all being pooled at group as well as a university. Okay, I think group because university also have subsidiaries. Subsidiaries, because our university is a company, so there's definitely it's easily they can, but even statutory bodies, they can use this as well, this format. Right, so if you look at the equity side, okay, there are multiple funds. Okay, operating fund, development fund, endowment, housing loan, vehicle loan, computer loan, research fund, okay, as well as slabs. Right, so the big chunk definitely. The big chunk is, this time, very interesting. Operating fund. You look at this in 2009, I think these are the years not very far when the university also still being built, isn't it? Okay, so that's why they have a development fund of 2.2 billion. Being accounted for, and then endowment. So endowment already exists at this point, being kept separately. So endowment here, both like at university level as well as at even at the faculty level. Okay, we have endowment fund, and so yeah, definitely need to be the accounts need to be kept separately. Okay, computer loan is for the I think staff, and research fund because at the same time university also promoting research. Okay, operating fund here because these are at the balance sheet level. That's why you just basically this fund balance. It's not really equity as you understood. It's a fund balance. Okay, so we'll discuss this later. Right, but anyway, these are the assets. Because asset is basically leftover. I mean, not leftover. I mean the balance, isn't it? So these are the financing side, the balance. So you don't see in the finance in the equity like accumulated profits. You don't see accumulated profits. Okay, or retained earnings. So there is no retained earnings, right? So this basically fund balance. But in terms of assets and liabilities, they're being pooled. Okay, they're not presented separately because these are consolidated statements. Okay, any questions on fund accounting?
Sir,
Yes.
yes, sir, I have. Just now, I don't understand why due to subsidiaries is a liability for the university.
Oh, sorry. No. I'm not saying that subsidy is a liability. No, I'm just showing this group and university. Why we have these two columns, and then this university is IUM as a parent company, and then group because IUM also have subsidiaries. So these are consolidated financial statements. Of course, I mean this is old one, 2009, but because my focus is not on the other item, my focus is on showing you that even IUM we have multiple funds that we kept, so they need to be managed separately, including the accounting operations, accounting services. Okay. Yeah, by right you can. So in other words, for each fund here, right, they should have a supplementary financial statements. So let's say endowment fund. Okay, so you can request, if you are the managers, you can say yes, please provide me with all the financial statements for endowment fund. You can request that because each fund they should prepare. Okay, the preparer should prepare the financial statements. Okay, so what are the for both? I mean, for all the statements, okay, including financial position, financial performance, key changes of equity and others, cash flow. Then you can assess how well is. So in other words, you can see, these are not in all this fund, but of course here is more on, very specific use, like housing, development. It's closely related to your IUM as a government entity. Okay, beside the operating fund, you need to have development fund. Okay, development fund generated from development budget, isn't it? I think at this point of time, yes, because it's accrual basis, it's accrual basis. Basically, development fund is reflecting our. It's good, It's basically the development fund is reflecting the money spent, okay, for the infrastructure. No, for the university facilities. Okay, for the university facilities. Okay, 2 billion. So before I mentioned to you, isn't it? How much money being spent to develop our campus. So you can get some ideas. Yeah, for development of our universities. So around at least 2 billion in 2009. Okay, to develop the campus. So what will be the present value of 2 billion with the around what, 7 billion something? Okay, so based on accrual, because URA definitely is a government agency, but it's a company, so they use accrual accounting. So that's why you can, some of the development fund reflected for the PPE, so being capitalized. Okay, now we move on to basis of accounting, or maybe is there any question on fund accounting? In CF, all right, no other question. Okay, now we move on to basis of accounting. Right, you have cash, you have modified cash, we have accrual. I think this one is more on recognition. Recognition. Okay, recognition. All right. based on accounting. In terms of recognition, I mean, cash means you record only when cash is received or paid, isn't it? But accrual, wow, now if you implement IFRS or MFRS, let's say revenue, you have to meet. What is the requirement to recognize revenue under accrual? Anyone quickly? Under accrual. Still remember or forget already? Under accrual. Okay, are you with me, class?
When service have been provided.
Service being provided. Okay. Yes, that's at the end of it, isn't it? But they have to meet the five criteria, isn't it? The contracts, performance obligations, service rendered, and you have to assess also the cash flow, if I'm not mistaken. Okay, if the service rendered, but there is issue of cash flow, so there is an issue of may not be able to recognize. I think my FARS now more restricted in that sense. Okay, anyway, right. So this example of sales and purchase order. Okay, and then good dispatch with invoice, pretty much. But I think in terms of the flow, the timing, okay, even this still relevant. If you, as we discussed on MFRS or class. Okay, just make comparison when recognition of transactions. Right. When purchase order issued, okay, or received, right? Under commitment accounting, so there is accounting entry, okay, under commitment accounting. So in government, this is, I put it very generally, it's possible. If you want to introduce this to your country, to Malaysia, it's possible. Okay, they call it commitment accounting. If you remember that, some funds need to be set aside, okay, because of commitment. So in government, sometimes they have to make a more rigorous accounting treatment. So it means that they put in the GL, right? So these are basically practiced in the US. They call it commitment accounting. So every time when they issue purchase order, there's accounting entry, right? And then generally, accounting entry start to trigger is when the good is received. Okay, you receive the invoice or the service delivery, right? That's under accrual. But under cash accounting, you only record in the GL when you receive cash or you pay the cash. Okay, so you can see in terms of timing, there is a lag in terms of cash. But the good point of cash is, okay, the more money you paid, that amount of money you recognize. Okay. And of course, with the cash accounting, there's a limited of information that can be recognized in the GL, in the general ledger, or in the accounting books. Okay. Right. So here you can see there is commitment accounting, accrual accounting, and cash accounting. Okay. Take note of that. Okay. Cash accounting that recognize transaction and other event when cash is received or paid by the entity, including cash equivalents. Okay, the measurement focus of the financial statement is balances of cash and exchanges for the period. Okay, that's cash accounting environment. In terms of what would be recognized in the financial statements. Okay. Features of cash accounting recognize only cash inflow and outflow. Purchases are only recognized when cash is paid, no creditors. Okay, in the phase of financial statements, balance sheet item limited to cash, no other assets or liabilities. Or no liabilities even, or no other asset including PPE, except for cash equivalents. Sales are only recognized when cash is received, or income is recognized when cash is received. Final accounts reporting cash-based transactions. Okay, disclosure. This one is you understand what need to be recognized in the GL based on the cash accounting. Okay, maybe if you think that for small business, yeah, this is okay. to use cash accounting. But here you talk about government use cash accounting for reporting. When every year they spend 300 billion, okay? And we come to reporting they use cash. So that's why beside the cash accounting environment, so there is a disclosure requirements. So a statement of cash receipt and payments, okay, and payment made by third party separately disclosed. Accounting policy and explanatory notes, detailed information on amounts shown on the face of financial statement, information required and encouraged to be disclosed. These are additional information. So if you look at the additional information, right, receivable, payables, borrowing and other liabilities, okay, commitment and contingent liabilities, performance indicators of the achievements of service delivery objective. So you can see that basically other assets, other than cash, and also liabilities will be disclosed in the notes, okay, in the cash accounting environment. Okay, so there is a need of disclose this, but it's not part of the clearly mentioned as an item in the balance sheet. Okay, so you're not sure the balance sheet is balanced or not by using this cash accounting. Right, so these are the extraordinary items, right? Major classes of cash flow can also be reported. Related party disclosures are very important. Okay, and asset and liabilities, comparison with budgets, as well as consolidated financial statements. Okay. All right, that's cash accounting. Modified cash accounting. Accounting technique that recognize transaction and other event when cash is received or paid. Okay, that is very clear as cash accounting. But I think why they call it modified, if you look at the second point there, the books are held open for about a specified period after the year end. Okay, that is what modified means. And that's why it's applicable to Malaysian government, because at the end, financial reporting, the main focus of financial reporting is for budgetary control or parliamentary control, okay, to make sure that all budget is being used, okay, in the fiscal period it is assigned to. Okay, Malaysian context, functional procedures, Circular 1, government accounting policies stipulates the use of MCA. MCA here is modified cash accounting for the accounts of federal and state consolidated accounts. Okay, even it's mentioned in the notes to the accounts, the use for modified cash accounting. So I think these are explanation of, yes.
Sir,
Yes.
Just now, right?
Yes.
For this next,
Oh, hold on, there is a time
that
lag there.
accounting period is not
Oh.
the second
Okay.
point. I don't really understand extension.
For this slide.
Yeah, I have a pound for about a specific period. That means the accounting period is not merely based on fiscal year, isn't it?
Okay, that's why the following slide explain this point. Okay.
Okay.
All right. So, okay, listen carefully. It is basically explaining the extension period. Okay, let's say for this example, the year end is 31st 12, 2018. So costs incurred in the before the year end, but the payment is made after the year end. Okay, the payment is made after the year end. So that payment will be recognized in the previous period. Okay, so the payment is made after the year end, but in terms of recognition, in terms of reporting, in accrual, if we pay after the year end, basically, yeah, that's about it. You pay, you will recognize in January, right? But in modified cash, if it is a pure cash accounting also, if you pay in January, you will recognize in January. But here you pay in January, but you will recognize that, you will report that in the year end. Okay, so it is allowed in modified cash accounting. So in other words, let's say the payment made in within the period is, the period here, what is allowed is for this 1 month in January. Let's say in 15 January, there is a payment made, okay, to the suppliers. And this payment related to the cost incurred before the year end. So that payment will be booked, okay, and reported as if it is made in 2018. Okay, it is allowed under modified cash. But of course, I mean, if the transaction is occurred in January and the payment made in January, of course, that will be recognized in January 2019. Okay. Another scenario is cost incurred in December 2018, paid in December 2018. So there's no issue. But the issue here means the cost incurred, okay, the good received in 2018, right? But the payment made within 1 month, in January, okay, within 1 month. So let's say in 15 January, the payment made for that transaction occurred in 2018. So that payment is recognized in 2018, not 2019. Okay, so you can see clearly why they allow this, because of budgetary control, or parliamentary control on the budget. That's the only different between cash accounting and modified cash accounting, because of that extension of period. And this is our practice in Malaysia. Another way to look at it is what else? That is allowed. Yeah, but of course, but generally, if you look at government, okay, of course, the payment is within 1 month to 3 months. 1 month to 3 months is quite reasonable. Okay, I think people generally the suppliers, they prefer, particularly now during the time of crisis. A government job will be the best jobs, because government, even they delay in payments, but they will definitely pay if the services are being provided. Okay, whereas in private sector, it can be it can be what do you call it, in payments, right? But government, this likely will be impacted. Agree or disagree? You get the point?
Yes, sir. Okay.
Okay. Right. Okay, never mind. Well, how do I, when I using this Gmeet, when I present, basically the whole screen is PowerPoints. Okay, so that's why every time when I have to check your answer, I have to check back your the chat. Okay, at this point I don't have that technology where when I present, then the whole thing can be seen. Okay, anyway, continue. Okay, these are the elaboration of this. Okay, reporting include transaction taken place after the year end. So, and then the cash flow will be deducted, right? And to focus on the payments during for the budget for 2018. Okay, another explanation. I think we can, this is the same as I mentioned just now. Payment during extended period, I charged the prior period. Okay, received. Yes, okay, I think there's further elaboration. Right, Evaluation of cash accounting, record cash flows, facilitate link with taxation, okay, facilitate parliamentary control, since parliamentary approvals are granted on cash basis. The problems, provide no information about asset and liabilities, okay, on the face of financial statements. Provide no information about creditors or debtors, may not separate capital from revenue, okay, capital from revenue expenditures, okay. So generally capital expenditure we have to capitalize, so they don't capitalize under cash accounting. So all become expenditures. Not necessarily comprehensive, little used to management other than as cash control, okay. May undermine efficiency drive, okay, because if they basically calculate the services, right, it's based on cash budget, expenditures. So may not reflect the total costs, okay. And all the legacy costs, okay, basically there's no legacy cost. All development has been considered as expenditures. Okay, unlike what I showed to you with IUM, because IUM using accrual accounting, so that is different. Okay, now we move on to modified accrual accounting. Accounting techniques that recognize transactions and other events when cash flow involved or collection payment can be reasonably estimated to be received in the future. Okay, physical assets are not presented in the financial statements. Only disclose future commitments, requirements by recognizing financial assets and liabilities. Okay, net financial assets. Okay, so in modified accrual, I think if you look at this, the main features, it is an accrual accounting, okay, except that they don't report physical assets. So in other words, if you look at the statement of financial position, if you cannot see a PPE and also investment property, so most likely it is modified accrual accounting, okay? So physical assets are not presented. Okay, that's modified accrual accounting. Okay, but it is an option as a basis for government sector. Maybe this can be used as a transition. Let's say the government move from cash accounting to full accrual. Okay, before they can move to full accrual, they can use modified accrual accounting as an option for them to report their financial statement based on accrual accounting. But it's just that the physical assets are not reported yet, because you know, it takes a lot of time and resources, okay, to develop the accounting records for the physical assets, okay, for the PPEs. You talk about valuation, you talk about identification of the assets, okay. Later on we discuss the challenges of how to measure and recognize physical assets, okay. Okay, lastly, accrual accounting, transactions recognized as they earned or incurred, okay, generally, right. Of course, nowadays we have to bring this requirements to this requirements by FARS, okay. There is certain ways of, I think, more enhanced accounting standard to make sure that all assets recognized in the financial statements at the end can generate future cash flow. Okay, I think that's my understanding of IFRS. So more closely, they focus on that. That's why, okay, impairments, okay, fair value, all that are being widely discussed in IFRS or MFRS. Right, valuation of accrual accounting, record asset liabilities, and all basically complete sets of assets and liabilities. Clear separation of revenue and capital, facilitate managerial control, okay, encourage development of value for money, right, efficiency, effectiveness, and economy. Increase financial transparency in public sector, okay, because accrual accounting, let's say, I think that's interesting. For instance, like a renovation of office equipment. Okay, renovation of office equipment is a capital expenditure. Okay, if they can meet the fixtures and fittings requirements, so we capitalize. So I think for the CEO or the Director General, they want to improve their office, so make sure that they improve everybody's office, not only their own office. Okay. That's one. So it's being capitalized. Being capitalized means it will be the focus, become a focal point. People can pinpoint, hey, why there is a big increase in your capital expenditure. So what are you using? Are these related to your main operation, or is this related, unrelated to their services? So this question can be highlighted, right? I think there was years ago when I had a workshop. I conducted a workshop with the civil servant. So when we shared, I think, one scenario of accrual accounting when it was first adopted by one government agencies. And then when the manager concerned, he realized that his office innovation will be reported, so it creates uneasiness. Okay, because it will be capitalized as an asset, right, rather than being hidden as expenditures. Okay, sharing good practice from private sector. Challenges requires use of new accounting competencies. Okay, relatively new skill set for accountants in public sector who were trained in cash accounting system. I mean, that's basically very logical. They've been using cash accounting, ever since 40 years. The last time they learned accrual accounting is basically in their university studies. Okay, so they have to beef up their competencies. That's one. The other, of course, they can train all these new accountants so that they can have the competencies. That's one. The other, of moving from cash environment, okay, from cash standards to accrual accounting standard, basically MPSAS. Requires considerable use of judgment. Okay, so I think with the MFRS as well as MPSAS, okay, the requirements for continuous impairment tests and all that. Okay, maybe even to use the right accounting methods. Okay, so requires judgment. I mean, sometimes people argue that you just use experts, okay, expert view, let's say on valuation, but you have to assess the criteria used by the valuers to make sure that it's very consistent with the requirements of the accounting standards. Okay, so it's quite challenging if they're not being trained for that. But anyway, I mean, because government accountants and Big Four, they also work together. I mean, all their accountants, the sharing of knowledge definitely will be there. Account and budget should be on the same basis, okay, to facilitate budgetary control. Preference for cash basis for parliamentary control, right? So that can slow down the implementation of accrual accounting. Require commitment from management for its usefulness, right? At the end, if they prepare accrual-based accounting, will that be useful for their decision making? Okay, so need to be explored further. Okay, comparison: cash versus accrual, income recognized when cash received, accrual when earned, expenses and expenditures when payment made under cash, recognized when incurred, asset not capitalized and classified expenditures, whereas accrual will be capitalized and depreciated, or maybe based on whatever valuation, revalue the measurement method. Liabilities: credit transactions not reported, reported expenditures when payment made, recognized when incurred. Okay, so I think liabilities, that's why if it is under cash, they put aside. It's kind of commitment accounting as well. Okay, but in Malaysia, I think they just put aside. They put as their notes to ensure that enough reserve being provided for their commitments. Okay, once PO been issued, so they need to provide future payments. Okay, so there are variety of practice as well. Okay, financial accounting reporting framework and the effect. So just a quick look on accrual accounting. Okay, UK central government, the responsibility of the treasury, local authorities also requires preparation of financial accounting statements. Okay, in the US, many standard setting bodies for the state and local government, and these are some example. SCGA, and then they have also GASB. Finally, established governmental accounting standard board. So they have FASB for the private sector, so they are GSB. So just like Malaysia, isn't it? Malaysia, we have MASB, okay? Malaysian Accounting Standard Board. Okay, so we have this, I think, accounting foundation, isn't it? So I think similar pattern we use. Right, IFAC, Global Organizations for the Accountancy Profession. Okay, Malaysia definitely a member of that. Represent 2.5 million accountants, okay, both private practice, industry, government, and academia. IPSAS, okay, these are the companies that they are referring to. Okay, they have International Public Sector Accounting Standard Board. And in Tonsai, so in Tonsai, later on we talk about auditing in public sector. Okay, the objective of IPSAS board to develop high quality programs aimed at improving public sector financial management and accountability, including developing accounting standards and promoting their acceptance. Okay, I think if you look at the last word, promoting their acceptance, because they are international body. So the local government accounting body must adopt, okay, the standards. So in the case of Malaysia, we already adopt both MFRS, okay, as well as IPSAS. Now we moved, it become MPSAS. So MPSAS is under AG, Accountant General Department, okay, whereas MFRS is based on MSP, okay. So our focus is basically on the IPSAS, MPSAS. So just have a quick look of IFAC public sector website. Okay, this IPSAS website. So you can have a quick look. So there is a handbook here, right? A handbook for the IPSAS. I think it's good for you if you can download it, where it contains the International Public Sector Accounting Standards. And for you to be able to see, I think for international students, it's good for you to have a copy of this as a guideline. And so I think, you can, I think the detail of accounting standards for public sector are provided in this website. Hey, oh, you finished class, huh? Wow, time is flying, huh? Okay, brother, just a quick look. I think I have a few more. We can finish it in. So I have a quick look on this. You can download the accounting standards, but this one is for IPSAS. For international student, I encourage you, okay, have a quick look. Most of the standards are being word-to-word adopted by, in the case of Malaysian government, for instance. So you can download all these handbooks, okay, that contain the standards. All right, so how many? Okay, still many, yeah. All right, I think time is up, isn't it? Why so fast, huh?
Yeah, 2 more slides.
Wow. Do we delay anything? Okay, 2 more slides, is it? All right. 2 more slides. 27. Okay, okay, we're done. All right, good. Okay, 2 more slides. We finished it, huh? Okay, due process. These are process of adoption. Then lastly, conceptual framework for financial reporting. The conceptual issued to apply to general purpose financial reporting under accrual basis accounting. Establish concept underpin financial reporting by public sector organizations. Provide guidance in dealing with financial reporting issues not dealt previously. Providing guidance on qualitative characteristics of information in financial statements, okay, including relevance, faithful presentation, and understandability. I think very similar to MFRS. You can have a quick look as well, because I think in the later on we'll see in the accounting standards in Malaysian context. We'll discuss that as well. Okay, any question? Wow. Any question? Very quiet, huh? Right.
No.
Yes. Okay, so you can see you need to appreciate the differences that is there in financial accounting and reporting practices in the case of public sector organizations. Okay, so in other words, it's not like a direct translation or a direct adoption from MFRS directly to as a public sector accounting standards. There is modification. Okay, and at the same time, of course, they try to get the benefit of IFRS, but just that it need to be linked or need to commensurate or to correspond with the public sector organizations. Okay, because they're not profit making, but at the same time, I think good standards it should be practiced. Okay, pretty much right. If there is no other questions, I end this session with wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi taala wabarakatuh.
Thank you, sir.
Okay.